Got multiple sources of income and wondering how the tax works? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey, and one very modern and common situation we see a lot right now is that people have different income sources from all over the place. You know, they've got their employed job and then they might have like a side hustle, as it's known, where, you know, they're doing a bit of consulting, they might be doing a bit of e-commerce on the side, there might be Airbnb in their spare bedroom, and then they might be investing in the stock market or some crypto or something, and all these things are coming into play, and it's like, how is that taxed? Well, in this video, I just want to give you kind of the basic overview of how the system works so you get an appreciation of what's going on. Because I think one of the main things we hear a lot is someone will say, oh, well, my day jobs, I pay all the tax on that already. And actually, yes, you do, but in a way, no, you don't. And I want to kind of get into why that's the case and just show you how it works so you got a good appreciation of it. But before we get into it, if you like these type of videos, make sure to click the subscribe button below and the bell so you get notified whenever we release more videos just like this one. So let's start off with the basics then. What's the basic rule? Well, as a UK tax resident, so you pretty much live here in the UK, you're going to get taxed on your worldwide income. So it doesn't matter where you hold these things. So, you know, if you've got American shares or you've got property somewhere else or all these kind of things, if you've got income, the UK government's going to want their slice out of it if there's tax due. So that is the basic rule. So think about that for there. And then just think, and you report that, and the way that's dealt with is via a UK self-assessment tax return. So those things are quite interchangeable. Some people say your tax return, some people say your self-assessment. Is the same thing really. So, and it all goes into this one big pot and it churns out a tax bill. You know, you fill in all the relevant pages for the different sources of income, and then it chucks out a tax bill at the end. Now, when that tax bill gets chucked out at the end, if you've paid any tax in any of your day job, for example, that gets taken into account as well before giving you the balance of what's due, or if you're really lucky, you'll get a refund. Now, the easiest way to picture how the tax works when you've got multiple things going on is think about it like a stack of books. So in this image here, you can see that actually, if you just stack your income, starting with your job. So in this particular example, let's do an example, always think it's a bit easier. You're a teacher. So you've got your employed income, so that's the first stack of books. Then on top of that, you're then going to add things like self-employment. So in this case, let's say the teacher is doing a bit of tutoring, private tutoring on top, and actually they're going to rent out their room on the Airbnb site every now and then to supplement the teacher's income. And then they've also invested in the stock market and they've got some dividends, and that's always kind of at the top, and you know, your employed income's always kind of at the bottom, and then you just stack these things on. Then what happens is you take off certain reliefs. So normally UK individuals, there are circumstances where this wouldn't apply, but for most people in the UK listening to this video, you're going to have a personal allowance. So around 12,500, depending on the year and when you're watching this video, you're going to remove that bottom stack of books up to 12,500. So that's kind of your relief, and you imagine all the rest of it kind of drops down. And then you're going to pay tax at the various different rates. So, you know, with what's left. And the reason that feeling of taking the bottom books out and sliding it all down is important is because we have different rates of tax in the UK. Up to around £50,000 currently is taxed in what they call the basic rate. So your tax rates in there tend to be around 20% on your income, and then your dividends, they have a different rate. So currently they're at 7.5%. So you've got a little bit of a tweak. Actually, as we're recording this video, that dividend tax might actually change, but for now, they're the kind of rates. You can see there's a difference. So, and the tax return knows how to handle that. Now, when you go above that line, above your stack of books that's stacked up to 50K, if you've got more of a stack into that next bit, then you pay the higher rates of tax, and that income is then 40% quite commonly. The dividend goes up to 32.5, for example, in there. And if you're really lucky and your stack's going over 150K, it starts to get more complicated and the rates get even more expensive. So, but for the majority of people listening to this, you're going to be in those lower two bands. So, and that's how it works. So that concept is quite key. Now, thrown into the mix of all of this as well is various allowances. So whilst that big easy one of here's your personal allowance, we're going to slide that part of the books out and drop it all down is in there, you've also got other things thrown in. So for example, the first £2,000 of dividends that you get are going to be tax-free in the year. There's a trading allowance you could potentially use against your self-employed tutoring in this example. There's also potentially, and there's another video we've done on this, a rent-a-room relief against your Airbnb income. So you've got all these other reliefs that are possible, but if you didn't use any of them, then you're going to pay your tax at the appropriate rates. And again, all of this is handled in the tax return. And if you're using an accountant, that's normally where their expertise is going to come in to pick what's the best reliefs to use. Are you missing any? And keep that tax bill to only what you should be paying. Now, I did mention at the beginning of the video, I said to you, a lot of people say, well, I pay my tax in my main job, so I don't have to worry about it. But that's not how technically it works. Technically, as you can see, it all gets stacked into one big pot. then your reliefs are removed, and then you're going to pay, or certainly the tax return is going to calculate a tax bill on the rest of it. But what it does do is it says, okay, let's say your tax bill's 10 grand, but you've paid 6 on your employed job because that's what the system's deducted off you in the time, then you're only going to be asked to pay the difference. What tends to happen is when you first submit that tax return, revenue and customs are going to quite often think that you're going to carry on having these different income sources. And what will happen is they'll lower your tax code in your current job. And there's other videos on tax code so you can see this. But what will happen is you'll get taxed more in your day job. So next time you do that tax return, when it does, here's your 10 grand bill, you might now have paid 7 grand. So you've only got to pay the 3 grand difference rather than the 4 grand difference before. So your day job can be affected by these other income sources, but only really once you've kind of got a tax return going in. And even then it's always a guess, because they guess that you're going to earn the same amount of money again. There's a bit of leeway, so if you really felt aggrieved, like one of those income sources just doesn't exist anymore, you're no longer renting on Airbnb, for example, you can actually phone the revenue and say, look, I haven't got this, can you take it out of my tax code? So then you get more money on a monthly basis from your main job. So it is a little bit flexible. So don't be afraid of phoning them and telling them if you think you've got it wrong, or if you've got an accountant, obviously you can ask them to do that for you. But do know that it doesn't affect your day job in reality, but it can do once that tax return's in. Like early on, it's not going to affect it, but once that tax return's in, you could easily see a tax code change, which will feel like it's affecting your tax. Again, it's all going in one pot. So if they get it wrong and they overtax you, you're going to get it back, but that doesn't help you on a monthly basis when you've gone around a whole year without the money in your pocket. So do bear that in mind and keep a good close eye on it. And as I say, that's it. You've got different boxes in the tax return, different pages for each of those different income sources, all goes into that one tax return, and then you get one big bill, and it gets all worked out with what taxes you have and haven't paid. And where it can get quite complicated is if you have got foreign income, for example, then it starts to go down another rabbit hole of confusing, where you have what they call double taxation treaties. So sometimes you might have paid tax, but you don't need to pay the UK tax, but it's all handled inside of that tax return. If you get down that part and it starts to get really complicated, that's generally where you're going to look for a professional to help you out. But do know that it's all sorted in there, it's all handled in there, and in reality, it should all be relatively straightforward. At the end, you'll get a tax bill or you get a refund. That's it. If you've enjoyed this video, please do share it with anybody you think needs to know this information, and I'll see you in the next one.